Well, hey, everybody. If this is your first time joining us, then welcome to the Mortgage Innovators podcast, where we deliver fresh and hopefully entertaining insights on all things mortgage and the innovation that is propelling our industry ever forward. My name is Sue Woodard, and every Tuesday you can find our rotating group of co-hosts who all share their very own unique connection to this industry. So this week, we're actually beginning a cool new series called Eat, Sleep, Adopt, Repeat. And this month we're talking, as you can imagine, about the importance of technology adoption and how that will globally improve the processes all around your business and ultimately help you save money and time, which is what it's all about. But before we get into this episode, we're really excited to announce that the Mortgage Innovators Conference 2023, Innovators UNITE, is going to be held June 14th and 15th, 2023 at the Hilton Anaheim. Sponsorship opportunities are open, and if you'd like some more information, head to mortgageinnovators.com/conference to keep up to date. That's mortgageinnovators.com/conference. But without any further ado, first of all, I want to welcome my co-host, Michael Guidotti. How are you, bro?
Good. How's it going?
So good. Always good to see you. And we have an amazing special guest. Excited to introduce the CEO of Reggora, Brian Zitin. Welcome, Brian.
Hello. Thank you for having me. You said entertaining in the beginning, and what is more entertaining than appraisals? So, excited to get going here.
That's what everybody in the mortgage business always says, is what is more entertaining than appraisals, which is why you're here. So talk to us a little bit. First of all, I know a lot of people are familiar with Reggora, certainly familiar with you, but tell us a little bit about Reggora. Who is Reggora, and what are you doing to really modernize that appraisal process?
Yeah, sure. So we're a venture capital backed fintech, and the North Star for us is to streamline and automate the appraisal process as much as possible. So we provide workflow software to banks, mortgage lenders, credit unions, anyone who needs to order valuations to essentially handle the full A to Z workflow from, placing an order, collecting the payment, tracking the status, anything that you can think of in terms of actually getting appraisals done. And, that's what our software helps with. So we work with like 150 lenders ranging from, small local credit unions all the way up to some of the largest lenders in the country.
Awesome. I know, as we kind of dig into some of the details here, we want to get under the hood, but just to set the stage, you've shared some interesting numbers, and I want to know, like, dollar-wise, how much revenue is lost from that manual appraisal process?
Well, we've done, tons of analysis around this, whether it's with third parties like Stratmore, our own data, industry surveys, and actually have created a financial model where you can plug in, hey, here's what I'm doing today for my appraisal process, here's what our stats look like, and it'll spit out, here's what you could be saving if you fix your appraisal, in terms of various workflows. So the highest end of the spectrum that we've seen in terms of like lenders who really need a lot of work is close to that, $250, $275 range per loan that they're missing out on, in terms of basic savings by not optimizing their workflows.
Wow. And Michael, I know being a lender, you've got some specifics that you want to dig into.
Yeah, I think like with all technology, right, it really dials into the change management aspect of it. So I think something that's, interesting from a lender perspective is just, getting in front of some of the questions that may come up. What's one of the biggest hurdles or change management pieces that you guys find with, adoption with your clients that you're working with?
Yeah, it really depends on the personas. Some are like very centralized, like consumer direct type lenders where it's very standardized, centralized. You have kind of a couple operational decision makers, and those are typically very straightforward. Where you run into a lot of, change management issues, to your point, is more in that like distributed retail model where, each branch has their own, they have their particular way in terms of how they want to get something done. And even if it's not necessarily the best, or most efficient workflow, like that's what they want to do. And some lenders say, no, you have to do it this way. And some lenders, take a white glove approach and, let them do that. So where we run into friction is if when we sign a customer and the operations person or whoever we were talking to, engages with us, doesn't get any buy-in at all from like, the star players when it comes to like the production staff. We do all this rollout, we're setting up, and then, we roll out and they're like, whoa, what is this? And all that. So what we've learned is upfront, even before you sign a contract, we like to get production staff involved and be like, hey, this is what, we're trying to change, this is what we're trying to improve. It's going to make your life easier. Here's how that works, and get sign off, before even kicking off. And that leads to like the smoothest engagements. When you don't do that, there's definitely some fireworks sometimes.
Very smart approach. I think Sue and I can both relate to that. Always involve the sales staff.
Indeed, absolutely. Well, talk a little bit, Brian, about, some of the specifics of exactly what you do. Like you're talking about, how this revenue can be saved in that manual appraisal process and some of the things that you do. But I know you're not going to give away the secret sauce, but tell us, what is it exactly that you're doing that has those savings of up to $275 a file?
Yeah, I would put it into 3 buckets. So it's improvement to cycle times, improvement to user experience, and then actual like operational efficiency. So the 3rd bucket's really easy, right? If it took you 10 people to manage appraisals and we can do it, with only using 5, or you can use those 10 people to scale, much more effectively, pretty straightforward. You're saving hard labor costs in terms of, that sort of stuff. Where some of the more sneaky numbers that people don't realize are on these like dark matter, appraisal fees. They just get sucked out. So things like changes of circumstance, where there's fee escalations on an order and it's not properly redisclosed, or someone marked it as collect at close in terms of the appraisal fee, and then the borrower bowed out of the transaction, before they paid, and you're on the hook for paying the vendor. So there's a lot around fees and the just general nature, because it's very fragmented in terms of what lenders disclose is different than the market reality a lot of times. And so there's a lot of optimizations around appraisal fees and payments, pipeline management, underwriting. Like if you have collateral underwriters who are using a manual checklist to review every single appraisal, that's obviously going to be way more inefficient than using automation and review tools. So that's like the operational efficiency bucket. User experience bucket, like let's take for example the loan officer side of the house. If your loan officers have to email someone to figure out what's going on with the appraisal, that is time that they are taking doing that versus not talking to a borrower or trying to get new business. So bringing transparency and doing deeper integrations into the core systems like the loan origination platform and things like that, so that there is transparency, better user experience, all of the above, you can really let people focus on what they're supposed to be doing, and you get better efficiency that way. And then the first is like pure cycle times, and this one's pretty hard to calculate for some folks, but if a little bit different in this market versus last year, but if you could close appraisals in 5 days versus 14 days, what would that mean for you as a business, right? You miss less closings, there's less carrying costs in terms of like warehouse funding, there's all these calculations that can be done to get to dollar numbers depending on your situation. So yeah, people don't realize, but appraisal actually touches tons of the process all the way from the loan officer to the closing table. And so yeah, those are the 3 buckets: cycle times, user experience, and operational efficiency.
So a couple questions that came to mind on that too is, when you're talking about the user experience, the LOS system, are you integrating into like point of sale tools as well on top of the LOS side, or is your guys' primary focus just with the LOS?
No, point of sales as well, and that's another user experience for the borrower, right? And which could potentially lead to more referrals and better loan officer retention, things like that. There are 3 or 4 key appraisal workflows that touch the borrower: them paying for the appraisal, them scheduling the inspection if it's a refi, the actual delivery of the appraisal, and then the status in terms of like that Domino's pizza tracker. So if you can get those into the point of sale system, they never need to leave. That's obviously a way better borrower experience than having to leave and go into some potentially separate white labeled email or something like that where they don't know what's going on.
From the time that somebody's really moving forward, kind of signing the deal, what's your kind of time to implementation? Like when we're talking about that lift that we're picking up, right? What's kind of the time till you see that as a lender, rolling out the product? When do you really start to realize some of those benefits with you guys?
Yeah, so I'd say the biggest factor is the loan origination system, because that is like the core system that we have to plug into. So if it's something out of the box like an Encompass or an Empower, something like that, we have existing integrations with those systems that are very straightforward, battle tested, amazing. So those can get rolling anywhere from like, 2, 3, 4 months, pretty easily to go from signed contract to placing your first live order. Once again, depends on if you can get buy-in from everyone up front and get, fast alignment in terms of workload changes and change management. Where it can take a little bit longer, but is often, a huge ROI, is if the lender has like a proprietary loan origination system and it requires, a more, custom integration with our API. That can go, more close to like the 4 to 6 month range, because, you have to build out the initial implementation. But I think, it's fair to say, comparing it to other initiatives like a, God forbid, LOS rip out or, something like that, it is definitely lower on the totem pole in terms of like level of effort.
That's like the heart and lung transplant. Nobody likes that, but so, interesting too. I'm glad you touched on, by the way, the internal experience as well as the customer experience. I think is really important, because to your point, it's not necessarily so much about like, hey, speed to close right now. That's a big deal in a refi market, not as much in purchase, but it never fails to amaze me, both as when I've been on the lender side as well as being a customer. The urgency around getting that appraisal back, it is the thing that borrowers lay awake at night and think about when they're purchasing a home. It's like they're kind of like, yep, I'm approved, that's cool, but the appraisal, I mean, it's one of those things that is really, I think a sensitive emotional thing, and I like that you're doing a lot to solve that, because it's part of what makes that borrower experience, gets the repeat and referral business. So I love that you touched on that, Brian.
Yeah, no, I mean, to your point, the appraisal is really one of the only things outside of the control of anyone involved, right? And so no matter how much the loan officer can reassure you, even the loan officer is like, I hope this comes back, on time and at the right value. So it's just a stressful, nail biting, time. So anything that you can do to kind of ease that definitely goes a long way.
We're almost out of time, but Michael, any other burning questions about Reggora and appraisals?
No, I think the only thing that I just ask about, just because I feel like right now it's coming up more than it has really recently, is on top of just the front end appraisal piece, but are you guys also handling like field review orders, those types of things? Because those seem to be the burning item I've been hearing a lot about recently.
Yep, no, obviously a lot more common right now, but yeah, we handle all types of products, and even we're getting ready to focus on a lot of the new products that are coming to the appraisal industry, very shortly, in terms of like the GSE kind of alternative appraisals with hybrids and stuff like that. So yeah, we're always trying to go where the hockey puck is going.
Well, with that in mind, as a final question, what actionable steps can lenders take as they do seek to reduce their cost to originate, increase their margins? What would you recommend right now? What are some specifics?
Yeah, I think that, it's really just being open to kind of doing discovery calls, right? I think, and also being willing to say no to, some internal things. Like I said, where I think there's the most pushback is like lenders who are like, no, our appraisal process is fine. Meanwhile, they don't know about, a lot of the burning fires happening underneath because of the lack of kind of data transparency. Or, they do make that leap and get a new platform, but they try to shove, old processes and workflows into it, and it kind of is a moot point at that point, right? So I think it's like open-mindedness and trying to stay strong, when it comes to, new workflows and processes.
I have to tell you, I just realized my phone was transcribing this entire conversation and just sent it to my 80-year-old mom. So I expect some interesting questions from mom tomorrow about Reggora and appraisal management. So just now, where could lenders and my mom go to learn more about Reggora?
Yeah, you can just go to our website. If you Google Reggora, it'll pop up, and you can either request demo. I'm pretty active on LinkedIn. You can hit me up directly, and yeah, we'll show. We're bringing sexy back to appraisal. That's the other catchphrase that we like to try to use here.
I have not heard that one yet, but I like it. Michael, thanks as always for being a great co-host, and Brian, thank you. We really appreciate your time today and educating us on all things Reggora, who is bringing sexy back to appraisals. Who knew? But hey, most importantly, thanks to all of you for listening to today's episode. And if you like what you heard, make sure to subscribe to the Mortgage Innovators YouTube channel or wherever you podcast. And until next time, thank you, and we'll see ya.